Hello, Chris Green here with the Flood Insurance Guru. And today we're talking about the impact the real estate market can have on flood insurance. You might be thinking, well, how in the world are the two connected? When it comes to flood insurance claims or requirements, it can have a big impact. You see this house behind me? We're in a neighborhood here today that has a lot of investment properties that are being flipped. Well, what happens is FEMA has a rule called the 50% rule. And what this rule does is it impacts substantially improved and substantially damaged properties. Wow. So how is this 50% determined? And what are the requirements? Well, it's determined on market value. So if you have a real estate market that crashes and you're flipping properties, then all of a sudden that 50% improvement is a lot less than it would have been in a good real estate market. So what happens is when you have these substantially damaged or substantially improved properties, FEMA requires these to be elevated or at least be at the base flood elevation. So if you have a property that's below it, you have to take certain efforts to raise this property or bring this property up to the base flood elevation in order for it to be covered under the National Flood Insurance Program. So this is what their 50% rule is. Now what's really important with this, let's say you have a market crash where a property is only worth $90,000 now and it might have been worth $200,000, like what happened in 2008. So all of a sudden what happens is, you go from maybe $100,000 improvements, being 50% to $40,000, which can be a big difference. So if you're flipping properties, or if you're doing improvements to your property, this is something you want to be very cautious with depending on the market. Or when a flood insurance claim does happen, where's the market going to be at? Here in 2019, we're at the top of a market. A lot of people are predicting that the market is maybe not going to crash, but it's going to steadily go down over the next couple of years because we're so high. So this could have an impact on your flood insurance claims and flood insurance requirements if you're going through the National Flood Insurance Program. Now, what's important to understand, though, is that private flood insurance does not consider this as substantially improvements. They don't have the same requirement as the National Flood Insurance Program to bring things back up to the base flood elevation, or even substantially damaged. They have completely different requirements. So if you've got questions about substantially damaged, substantially improved, the 50% rule with FEMA, please reach out to us. FloodInsuranceGuru.com. Go to our YouTube and our Facebook channels, The Flood Insurance Guru. You can also give us a call, 205-451-4294. Remember, we have an educational background in flood mitigation, so we can help you understand the flood risks like this one right here, your flood insurance, and mitigating your property long-term to help you minimize flood premiums and flood losses. Thank you.